Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He's managing partner of Asset Preservation Tax and Retirement Services. Good morning, Stewart. How are you?
Doing wonderful. How are you doing today?
I am doing fantastic. I always look forward to seeing you, and I love the information that you share. Today, I do want to talk to you about a couple different topics, but definitely the first part of the show, I'd like to talk to you about taxes, and then kind of getting into a little bit of a Roth conversion type situation, just in case the viewing audience is wondering what we're going to cover today, because it's always something different when we're together, Stewart.
Absolutely. I can tell you that the topic of taxes is really top of people's mind right now, especially with the upcoming elections and the outcomes of, the outcomes that could change dramatically in terms of the environment we're in. So it is absolutely the biggest topic people want to talk about now in finance.
And absolutely, I mean, obviously right now we're in such a pivotal year, if you will. It's an election year, so there's a lot of people that are guessing, are taxes going to go up? Are they going to go down? Does it depend on what candidate is in the office? What do you think, Stewart? Are taxes going to go up in your opinion?
Well, we are in the most efficient tax window in history right now. Okay. That I know for sure.
Yeah.
And, depending what political side you're on, they will posture it in a certain way to make it seem like, hey, this tax cut only affects the wealthy.
Okay.
And the reality is, we have a pretty big tax practice in our West Valley Sun City office. And the reality is that once the Trump tax cuts hit, there were only 2 clients of ours that paid more taxes. Now, it really did help middle America. And if you could put all the politics aside, right, the reality is that it was very, very good for most of America.
Sure.
And it's really important to make sure that your plan, your financial plan, takes that into consideration. So if you can just separate the politics, and I know it's hard to right now because we're seeing this just hyper polarized environment because of the elections. If you put all that stuff aside and just realize, hey, we are in this efficient window, we need to take advantage of it, then you can really move forward on a very good plan.
Okay. Let me ask you, Stewart, what kind of questions are you personally hearing from clients regarding taxes right now, and how are you helping to alleviate some of the fear and the stress, if you will, if that tax changes for them in whatever way?
Well, first of all, we need information, right? And I think we operate, like I said, a pretty big tax office out of our West Valley office. And the whole purpose of that office has nothing to do with preparation. It has to do with planning. And what we're seeing is that, there are advisors that will say, hey, maybe we should consider a Roth, contributing to a Roth. Well, just remember, there are limitations to your income if you're contributing to a Roth. There's limits to how much you can actually contribute into a Roth, per year. So what a lot of advisors don't want to do is go down the road of Roth conversion, right? And the reason is twofold. Number one, they don't have the proper information in front of them to plan on how it's efficient or inefficient. Well, the beauty of our tax office is that we can cash flow out whether or not it makes sense for you. People in general know Roth is better. I mean, it kind of goes without saying.
Sure.
But let's use an example of one of my favorite people on the planet. It's one of my kids' basketball coaches. He teaches at a local high school, and a public high school. And, he's been putting into this 403B. Well, what good does it do to defer your taxes if you've got 3 kids at home? You've got 3 kids, you have this great pension down the road, you have all these tax deductions. The reality is if you're at a 10 or 12% tax bracket, maybe it makes sense to pay the taxes now rather than later, right? And so we see a lot of people that just aren't given the proper information of how to create a plan. And the one thing that we've done is we've noticed that clients, when they come in, the one thing they'll say is, hey, even people with $1 million in savings will say, you know what, I don't know if we're big enough to do business with you. And the reality is this, most of our really advanced tax planning benefits people with $1 million or more, but it really does apply. If you've done a good job of saving, you've put a couple $100,000 away into savings for retirement, our plan can dramatically change the outcome of your situation in most cases.
Okay.
But the people at the kind of lower level of savings have never had access to financial planners that really, focus on these things, right? They're so worried about, advisors are so worried about selling you, making you a client, that there never is a real plan that gets put in place from tax savings. But when it comes to Roth, determining whether or not it makes sense for you, we don't want to just look at this year. We want to look over your lifetime. So some of our modeling software really allows us to look at what are the tax implications now, what are they later, does it make sense long term for you, right?
Yeah.
Because, some of these people that have these amazing pensions, their income is going to be higher in retirement than it is now.
Sure.
And the kids, hopefully, are moved out, right? So you lose some of the deductions. The standard deduction is so high right now that most people aren't itemizing. Some are, most aren't. But we have this just very efficient window right now that it really makes sense to at least consider a financial plan that includes the consideration of taxes.
Okay.
One of the things advisors oftentimes, if let's say you have $1 million IRA and you realize I have never paid tax on this money, but when it comes out, I have to pay tax. Not only do we have to pay tax, but if you pass it to the kids, they're going to pay tax at their tax bracket.
That's scary.
Well, it's this big tax time bomb.
Sure.
And I think when an advisor, let's say an advisor has $100 million, for example, that he manages in IRAs under his management. If he determines that, okay, every single one of them, a Roth would make sense for, but we're going to convert all of these IRAs to Roth because it's in their best interest. Well, he would lose 22 to 37% of his business because you have to pay the tax bill, right? So if you have a $100,000 account and you're paying 22% tax, that account, drops to $78,000, right?
Yeah.
So a lot of advisors are under so much pressure from their bosses to grow their book of business that they won't do the things that are necessary for the client's best interest. But also remember, when it comes to an IRA, I can tell you, the biggest sadness I see in our business is when I have a client comes into my office, 82 years old, his spouse has passed, and he says, Stewart, I have $1 million in the bank, but I never got to enjoy it, right? My wife is gone. She wanted to take these trips. I have all this money, but it's just me. I have nothing left. And the reality is this. If your plan doesn't create an environment that encourages you to go have a good time,
absolutely,
right? I mean, what's the point? You just want to stack up a bunch of money for what purpose?
Exactly.
To show your friends your statement? I don't know.
Yeah.
Most people say, no, we're saving this so we can have a great retirement. And I think it's important to have a plan to get you there.
Sure, absolutely. Well, Stewart, you couldn't ask for a better time for us to open up the phone lines for the first time this week. Can you tell the viewing audience what they can expect to receive by being one of your callers?
Yeah, absolutely. So for the first 10 callers, if you call 833-652-7829, what we're going to do is offer you a complimentary in-office consultation or even a phone consultation if that's what you'd like. But if you just call 833-652-7829, it is a no obligation. We're just kind of feeling each other out, whether or not it's a good fit. And if you call us, we'd love to see you.
Everyone thinks you're a good fit, Stewart. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. Stewart is offering you 10 complimentary, or actually first 10 callers complimentary consultation with him, not 10 sessions. I mean, that would be long. So the number to call once again is 833-652-7829. Once again, we have 10 spots available. All you have to do is pick up the phone and call. We're going to take a very short commercial break, but we'll be right back momentarily.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He's Managing Partner of Asset Preservation Tax and Retirement Services. Stewart, a great first segment of the show. And I love listening to all the information that you give about properly planning for retirement, because I have to ask you a question. How many people fail to properly plan for retirement? They don't have a plan in place at all, if you will.
You would be absolutely surprised. You know, there are people that have done a great job of savings, right, where they put money away, but they don't really know where they're going, right?
Yeah.
They have no sense. I just had an amazing meeting with this amazing man that has done such a great job of building up a local business. This guy is working, his fingers to the bones here in an auto shop that he operates, and the guy's an amazing person. And he had no sense of where he really was financially. Hey, am I okay? Well, the guy's got a couple $1 million saved, but he has no real sense of what does that mean?
Yeah.
Right?
Yeah.
The reality is that you need a roadmap. You need to know, when can I stop? Are you gonna have to work till 65? What is the right number? Do you need, some people say, oh, I can't retire till I have $20 million or $10 million. And these numbers are just made up numbers, right? Yeah. Everybody's situation's different.
Sure, everyone's dream is different.
Right, that's true. And the people I worry about the most are the people with this really high income and low savings, because you've gotten accustomed to this really high lifestyle, this expensive lifestyle, sometimes the talk I have to have with our clients is, toning it down years in advance to say, hey, we've got to prepare for retirement to get used to being on a fixed income. For other people, I'm telling them, hey, turn it up, go enjoy yourself.
Have fun.
Some of our clients, they don't have any kids, they have nobody to pass the money to. So then what's the point of stacking it up?
Yeah.
Right? Now it's time to have fun. Because you have to remember, there's a limited window that you can actually enjoy in retirement, right?
Oh, sure.
There's going to be, let's say you decide to retire at, 62 years old. Well, just remember, there's a few years in there that Medicare doesn't kick in till 65. But there's a certain time in your life where you can actually go out, enjoy, and have a great time and travel or whatever it is you like to do. And then guess what? Age gets the best of us. There's a point where you just slow down, right? And
you get tired,
Yeah, I think the biggest thing when it comes to retirement is to just know where you stand.
Sure.
To have somebody that's talking about the plan, not, the investments matter, right? It does matter how you approach the investment, but the most important thing is to make sure that it's not my plan, it's your plan.
Absolutely.
And I think sometimes the plans include you just an advisor holding onto the money for as long as possible, and it goes back to those IRA conversations. When your money's in an IRA, people don't use it because they don't want to pay the taxes.
Yeah.
Right? That's why Roth really adds that kind of additional planning level.
Sure.
But then it's important also to realize, we are in a very, very crazy time in the market right now. We're seeing, unbelievable volatility in the markets.
Sure.
We're not used to that. We're seeing daily fluctuations that used to be the same level of monthly fluctuations,
Yeah.
And it's important to have a not just a plan, but a strategy to manage that kind of volatility in the market.
Absolutely.
Yeah.
Well, Stewart, let me ask you, I want to talk to you a little bit about the difference between tactical and passive asset management. Can you explain to the viewing audience what the difference between those two styles are?
No, it's a perfect segue. I mean, so just like I was talking about before, the difference between passive and tactical is that most financial advisors use a standard asset allocation model that's static. And now we have a chart up that we'll pull. Now, if you look at the chart, what the chart will show you is that this is what most asset allocation models look like. You have 60-40 in bonds, 60, and you can flip it either way, 30-20-20, whatever. Well, that model basically is conducive to low levels of effort by the financial advisor. What it allows them to do is maybe rebalance quarterly so that all it takes is a computer program to shift back, right, back and forth. So let's just say that the 60% part outperforms the 40% part. Your computer system just reallocates it to get it back in line.
Okay.
The tactical approach is much different. On the next slide, the tactical approach will show you that in general, tactical basically allows people to, or a money manager to do things that he believes will benefit the client in terms of the way that they invest. Now, one of the institutional money managers we use, who I think has done an unbelievable job, during this very volatile market, has identified 6 distinct stages in the economic cycle. And it's their argument that during each of these separate stages, there are investments that do well, depending on where we are. Now, they have an algorithm, a computer program that basically tells them where the computer program believes we are in this cycle.
Okay.
Because remember, as an individual, how the heck are you going to know where we are? You don't have that kind of massive data to be able to, crunch to determine, hey, are we in recession? The problem right now is that the news isn't the news anymore, right? The news is tough, right? Because especially the cable news networks, you're literally on one side or the other, right? One side is, trying to say, hey, things are great. The other side is, saying, hey, this is the worst economy.
Yeah, it's
all politics, right?
It is.
And so sometimes you have to cut through all that noise and just look at the data. Where are we really? What do the earnings look like, et cetera? And I think it's really important to make sure that your strategy for the market takes into account where we are in the economic cycle. So, for example, when with the institutional money manager I was just showing you here, one of the things they do is they shift basically to really oversimplify this algorithm. Basically, when things look good, they hit the gas. When things look bad, they hit the brakes. And so a lot of my clients that say, look, I'm conservative, or I'm moderate, or I'm whatever, the reality is what they're doing is looking for what their average is, right? So some people go way too conservative because they're so in fear of losing, 20, 30, 40%. Well, the portfolios I was just showing you there with the tactical approach basically create drawdown limits. So, and the first thing I do when I'm doing a Morningstar or analytical report, when we do a portfolio review, what we'll do is the first question I ask, constantly, without any difference, is I always say, what are you willing to lose? What are you comfortable losing if the markets pull back? And they'll say, I don't know, 20%, 30%. I'll say, okay, well, you've got, $1 million. Are you comfortable losing 50,000? I don't know, 50, that's a lot of money. How about 100, 150, 200? You're eventually going to hit their pain threshold, right? Sure. Everyone has a threshold. And it's not right or wrong, but it's important to make sure that you have a strategy, an approach to the market that matches the client's comfort level, not just mine. And that's the one thing we do with our portfolios is we create portfolios that are designed around your comfort level with loss. Now, when the markets are good, we've done well. When markets are bad, what we've seen is like during COVID, for example, on our 10% drawdown portfolio, and drawdown means loss. So on our 10% drawdown portfolio, we saw a 9.6% loss from peak to trough. While most of America was down 32%, we were down 9.5%. And so our goal isn't to beat them on the way up, it's to not lose on the way down. So
Sure.
even if we're only capturing part of the upside, we can afford not to capture it all so long as we don't, take a substantial hit in the downside.
Absolutely. Stewart, thank you so much. We're going to go ahead and open up the phone lines again to the viewing audience. To our viewers at home, there are 6 spots remaining for the complimentary consultation with Stewart. The number to call once again is 833-652-7829. We know you have a lot of questions about how to retire with confidence. Stewart is able to actually put a plan in place that will benefit you depending on where you are right now, tomorrow, 5 years from now. The plan will allow you to weather any storm that you may face. Again, the number to call is 833-652-7829. We have to take a very short commercial break, but when we come back, we'll have more questions and answers about planning your perfect retirement. Please stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He's managing partner of Asset Preservation Tax and Retirement Services. What an amazing show, Stewart. And as we were going to the commercial break, the phone lines were lighting up. And I love that because we know there's a lot of people out there that are just really in need of information on how to properly plan for retirement. So many people do not have that plan in place like we've spoke of. If someone was fortunate enough to receive one of the complimentary consultations that you've been so kind to offer, what can they expect to receive when they first come into your office or meeting via Zoom? What does that feel like?
Well, first of all, people have to realize that that initial meeting isn't them saying that, hey, we want to do all of our retirement planning with you. Okay. And it's not me saying that I want to help you do that retirement planning, but it's simply feeling each other out, whether it's a good fit. It's really important, first and foremost, to have a relationship with an advisor that you trust and that you like. Because what I see invariably is that people feel just completely detached from their advisor because they felt like, hey, they were sold this concept and then they've passed them off to their, second advisor, or the guy only calls every couple of years. It's important to make sure you get together, that you like each other, because, people, it's funny, this last Saturday, I was, working till, I think I saw like 7 or 8 clients on Saturday, and people are saying, don't you want to take time off? And, well, when you surround yourself with people you enjoy being around, it doesn't feel like work.
That's true.
It feels like hanging out with friends, with buddies, but you're still being productive and so forth. But in our first meeting, what we're doing is kind of saying, hey, is there any room for improvement? And sometimes I have to say, what you have is perfect. I like it. And it's really, not about the investments or the plan, but also about communication, right? If there's nobody in there to kind of guide it, it's really important to find out what needs need to be filled in this situation. And quite honestly, I think the most important thing is to just get a second opinion on what's going on, because sometimes people have been with these advisors for so long. And so we have our offices in Scottsdale and our main office in the West Valley in Sun City area. And these people, I mean, remember, we're the snowbird capital of the world.
Yeah.
And so people come from all over the country. They've been with their advisors forever. They have this, you know, some of them have a deep personal relationship, which is great, which I look forward to. But, you know, they're just not willing to or ready to kind of make those moves. And
Yeah.
you know what? If what they have in place is fine, I'll let them know that. And I'll say, you know what? If things don't work out in the future with your advisor, come on back. The doors are open, right?
Yeah.
And so the first meeting is very, you know, we cover a lot of really important things, but it's kind of loose in the sense that while we're covering business, we're trying to fill each other out for whether or not this is going to be a good fit anyways. You know, but the one thing I can tell you is when people leave our office, they will leave with a lot more information than they came in with, you know, whether it's a good fit or not.
Yeah. Let's talk about someone that actually chose recently to work with you. What was the deciding factor for them and the fact that it was a mutually beneficial relationship? Tell me about that story.
Well, it's, you know, an example. So we have a client that came in that has been with the advisor forever. And when they came over, they were a little leery. Obviously, you know, you see this guy on a TV show, he's, you know, people either like me or dislike me, and most of them like you more than they like me, but but you know what, I've got to deal with it. No, it's they just want to see if it's a good fit, right? And you know, for someone that's actually chosen to do business with us, I make it very clear. The reason we don't lose clients, why people don't leave, is because we take care of that at the beginning, right? It's like a dating period to see whether it's a good fit or not, right?
Absolutely.
And so we're very okay with saying we're not for everybody, and you know, it's okay to say no. It's okay for it not to work, but you know, the most important thing is to just make sure that there's a good fit.
Okay.
You know,
Stewart, we have less than a minute left of the show already this week. I can't believe it. Do you want to tell the viewers one more time what they can expect to receive? I think there's 2 spots left now.
Okay.
That's it.
Well, if you call the 833-652-7829, what we'll do is do a complimentary, no obligation, complimentary portfolio review to just give you a second opinion on what your current position is. Even if you have a great relationship with your advisor, we'd love to help, give you a second opinion, just to kind of reassure you whether or not you're on the right path.
Thank you so much, Stewart. Thank you for spending time with us. I know how busy you've been. To the viewing audience at home, thank you so much for watching again this week. The number to call is 833-652-7829. We look forward to spending time with you next week. Be safe, be happy, be blessed, and we will see you again very soon. Thank you again.